Myanmar's junta has announced compulsory military service for young people. Observers say the junta seems to be trying to make up for soldiers it has lost fighting pro-democracy forces and ethnic minority militias. The country's state-run media said Saturday that the measure is in accordance with a conscription law enacted in 2010. The media said men aged 18 to 35 and women aged 18 to 27 must serve for up to 2 years. The military service can be extended to 5 years during a state of emergency. The military stressed that every citizen has the duty to safeguard Myanmar's independence, sovereignty, and territorial integrity. The Japanese government will host a Tokyo conference to support Ukraine's reconstruction efforts. The meeting is slated for February 19th. The government will present measures including support for landmine removal and debris disposal. Others include helping to improve the productivity of agriculture, Ukraine's main industry. The Japanese and Ukrainian officials also plan to help expand Ukraine's digital business and power and transportation infrastructure. More than 200 million Indonesians head to the polls on Wednesday to elect their new president. The three candidates held large-scale rallies on the final day of their campaigning on Saturday. A key issue is whether to continue or reform policies of outgoing President Joko Widodo, who has retained high approval ratings. Defense Minister Prabowo Subianto, former Jakarta Governor Anies Baswedan, and former Central Java Governor Ganjar Pranowo are in the race. Defense Minister Prabowo has opened a comfortable lead with support of more than 50% in the latest opinion polls. This is NHK World Japan.
Marketplace is supported by Bitwarden. The Bitwarden Password Manager enables quick and easy logins through biometric unlock and password autofill. More at bitwarden.com.
Oil, banks, and Hallmark holiday movies. Honestly, what more does one need? From American Public Media, this is Marketplace.
Marketplace is supported by Schwab. Schwab offers investors choices like full-service wealth management, self-directed investing options, and trading on Thinkorswim. More at schwab.com. And by JLL, a commercial real estate partner dedicated to creating lasting change for good in business, communities, and the planet. JLL.com. See a brighter way. And by On Watch, a new podcast from MarketWatch covering the financial news everyone is watching and how it's affecting the economy and people's wallets. New episodes each Thursday.
In Los Angeles, I'm Kai Ryssdal. It is the 12th day of February today. Good as always to have you along, everybody. We begin today, this Monday, in West Texas, the Permian Basin, the most productive oil and gas field in the world's biggest oil and gas producing country. This one. With such productivity, and on the theory that in many things, industrial and corporate, bigger really is better, comes a drive to consolidate, which manifests today in the news that publicly held Diamondback Energy is going to buy its privately held competitor Endeavor Energy Partners in a deal worth, give or take, $26 billion American dollars. And if you're thinking you've been hearing of more than just a couple of oil and gas mergers lately, you have. There was more than $100 billion worth of oil and gas mergers and acquisitions in this economy alone in the last year. Marketplace's Sabri Benishore explains what this consolidation craze is all about.
Not all oil wells are created equal. Some are easy, like squeezing water from a sponge. Others are closer to squeezing milk from a stone. Oil companies would much rather drill where it is cheap and easy.
We know essentially where the good drilling locations are, and so there's been a scramble by companies to secure those.
Andrew Dittmer is with Enverus Intelligence Research. He says the U.S. has oil and gas for decades of drilling, but the good stuff, the easy stuff,
the highest quality rock, you do start to draw that down the next 5 or so years.
So there has been a rush to gobble those sites up by gobbling up the companies that already own them. Diamondback Energy, Dittmer estimates, has an easy oil drilling runway of about 8 years. Buying Endeavor, he says, would get it about 1 more.
Which doesn't sound like a lot, but in the context of the fact that it's hard to make big advancements actually is an appreciable bump.
The other thing about oil drilling in the Permian is a lot of it is horizontal, and there is a limit to how far you can reach horizontally. Dittmer says it's around 4 miles. But a lot of drillers will hit a property line before they ever get that far. Josh Young is with oil and gas investment firm Bison Interests.
These guys have a lot of land that's next to each other, and so it's going to allow them to drill longer laterals.
But Young says there are a lot of reasons for the merger and acquisition frenzy that have little to do with oil.
Executive compensation these days is tied pretty heavily towards shareholder returns.
It's in executives' interests to grow their companies. Shareholders like it too because they get bigger dividends. And the more highly valued the company, the easier it is to buy more companies in the future. But the mosh pit of mergers is calming down.
We're getting to the point where there's very few remaining buyout targets.
In fact, Andrew Dittmer's company, Enverus Intelligence, predicts there will be no further Permian mega mergers this year. In New York, I'm Sabri Benishore for Marketplace.
Wall Street on this Monday, kind of a data-free day today, actually. That will be fixed, though, tomorrow. The latest reading on consumer inflation will be upon us. There was, though, still some trading done on Wall Street today. We'll have the details when we do the numbers. Shares of New York Community Bank fell another 0.2% today. That, though, is practically a win after the last couple of weeks the regional bank has had on fears that it was going to go the way the other regional banks went a little bit more than a year ago. South is the way they went. By May of last year, Signature Bank, Silicon Valley Bank, and First Republic had all failed. The immediate crisis didn't last all that long, thanks in large part to government intervention, but there had been concern, as happens with bank runs, that other banks might fail too if depositors lost confidence in them. Marketplace adjustment.